So, now Commissioner Johnson is a nationally recognized expert on financial risk management law and policy. She's got a specialization in the regulation of complex financial products. She's an internationally recognized expert on financial markets regulation and corporate governance, compliance, and risk management. We're going to talk a little bit about crypto today, Black founders. Again, this is really an area where our strengths, in addition to staff diversity, include economics and tech, right? And so this is an area where they kind of converge. So thanks so much for being with us. We're so proud of you here in terms of joining the commission. Also a fellow Michigander originally here, so it's wonderful.
My staff is getting tired of hearing that.
Before we start, Spencer, can I just say thank you to you and to the Joint Center, but in particular to you for friendship, mentorship, invaluable support during the nomination and confirmation process. This summer, post-confirmation, I had the chance to run into David Clooney, and now sitting on the stage with you in front of many friends and almost family, I would argue, probably the case. We've had arguments that made us feel like family. But the idea here is just to express tremendous gratitude. The nomination and confirmation process, as you have well articulated, can be a minefield for people of color. And to know that the Joint Center was prepared to support and encourage my nomination was invaluable. And so I just want to offer tremendous personal thanks to you and to your staff and to all of those that you work with that have poured in hours, not just over my nomination and confirmation, but over so many during this administration and so many in administrations past. So thank you so very much.
Well, thanks for acknowledging that. It's wonderful. It's easy to support great candidates. So thank you for being a great candidate in your service. So now, I won't put this on my mother. She's over there. My sister already knows what cryptocurrency. I don't know that my mother does, and I think I probably need to learn a little bit more about what cryptocurrency is. So just by way of background, could you tell us what is cryptocurrency? What are the advantages of cryptocurrency? What purpose does cryptocurrency serve in society? Like, why do people invest in cryptocurrency? So just framing it so we're kind of all starting from the same place.
Well, again, starting with a disclaimer, the views I will share today are my own. They are not the views of my chair, the commission, or the commission staff. Just establishing rules of the road, because I hope to say a few things that I am not often with an audience on a platform that I feel as passionately about and connected to in terms of my thoughtfulness about their engagement with this asset class. So if you saw a Super Bowl recently, you probably have seen an ad for cryptocurrency. So whether we could all describe it the same way or not, there is certainly a presence for this new asset class in most communities. But what I want to talk about is the overrepresentation of Black and Latino investors in this particular asset class. I also want to talk a little bit about the fact that in this particular moment, some elements of investing in this asset class are just beyond the reach of regulators, which means we are warning, we are encouraging, we are enforcing, but in fact, we are also seeing people experience significant declines in the loss of their investments. So I think it's really an imperative conversation. I would love to be on the road at every church, at every school, at every community center, because I think it's important to do exactly what you said, frame the conversation from the beginning. What exactly is this asset class? How does it compare to others? So we could describe the cryptographic nature of cryptocurrency, but I think a simpler approach is just to think about what we already have existing in our society and have had for a very long time that represents that is a representation of value or money. 200 years ago, it might have been a cart full of oranges or some cows that you brought along to exchange with someone else for something you wanted to buy. A few decades later, we might have seen every state in the union producing its own form of currency, generating specie. Later, we come to conclude that as the United States, we will have a single fiat currency that represents a promise that is to pay. And today, crypto coins and tokens, not to be confused with laundry, arcade, or subway tokens from the past. They are essentially just a representation of value. And one of the most critical pieces to this puzzle is that you can't physically see it. You can't touch it. You can't hold it in your hand, which creates challenges and opportunities. There are really interesting opportunities for the Black community with respect to cryptocurrencies. Clev Mesidor, who is here from the Blockchain Association Foundation, has articulated many of them. There are others as well who have described how this could represent a pathway, a bridge, for those of us who have been under-included or excluded, discriminated against or prohibited from directly participating in developing and producing intergenerational wealth. This could be an opportunity, but I also want to caution, because I wear my regulator hat, that at the same time, I'm thoughtful about the post-tax dollars that our community could be investing that is not income for investment, that is income that is needed for necessities, that could also be used in this space or invested in this space, and for which there may not only be no return, but complete and total loss. Mm-hmm. So I think there's a lot to cover for us as a community in the context of investing generally, and in this novel asset class, even more importantly.
Okay. So you kind of started to touch on it, but let's go a little deeper. You know, what is the experience of Black folks in terms of cryptocurrency, right? You know, are we overrepresented? Are we underrepresented?
So increasingly, there are economic studies that are evaluating the demographic of the population investing in cryptocurrencies. And for the most part, just to offer some operational mechanics, people are downloading apps to buy cryptocurrency on their phones, which has made the possibility of investing more accessible than ever before. In fact, I want to layer in a little bit of a word here for the ways that technology in the context of the Black community here in the United States, but the broader diaspora, the technology has really made it more feasible than ever before for us to participate in essentially maintaining deposits on a platform. So in particular, I'm thoughtful about in Kenya, the launch of M-Pesa, for those who are familiar, which is essentially just a platform like Zelle, or as my son says, Zelly. Or I could name others. I hesitate to do so wearing my commissioner hat. But you're familiar with the mechanism that lets you transfer money from one person to another. The tricky challenge here in the United States, which is appropriate for so many reasons, is that often you have to have a bank account even ahead of launching this platform, whatever platform, Zelle or otherwise, that you would use to transfer money. Historically, bank accounts have been a challenging concept. We are underbanked in our community for a variety of reasons. One of them is the fees, minimum account deposits, and other challenges that often make it expensive for us to participate in traditional finance. A lot of this in the context of developing technologies like distributed digital technology ledger, which is the foundation of blockchain, eliminate or reduce some of these fees because the overhead of brick and mortar buildings for banks disappears. The need to maintain the human resources to facilitate maintaining the ledger. How much do I owe Spencer? How much is he going to pay to me? Who reconciles that? The technology is able, the code is able in many ways to reconcile that with far fewer expenses, reducing transaction costs, making it more feasible for two market women in Nairobi to pass money by mobile phone to one another. We know that that is going to continuously enhance the ability of Black people across the country and around the world to engage in transactions. What we want to ensure is that those technologies are deployed safely and mechanisms that ensure against cyber attacks, the loss of money basically resulting from hacking, and particularly on platforms, and I really emphasize this when I speak to folks about being careful and considering the ramifications of choosing to put money into a platform or transfer. Not all accounts or platforms or wallets are FDIC insured, which is to say that we have within our community folks who are invited into seminars or symposiums where they can buy cryptocurrency. They create wallets that sometimes they can't remember the private keys to access. So I can barely remember the code to get into my iPhone. I am not someone who needs to be made to remember one more thing. But once that value, which you purchased using probably US dollars, is locked in somewhere, how protected is it from external attack? How protected is it from the possibility of complete and total loss by scam? People just literally engaged in what one of our colleagues, Lisa Fairfax, has written about many times, affinity-based fraud, right? During the lead up to the financial crisis, there was documented evidence of individuals essentially using church community groups and other gathering points for people of color, Black people in particular, to pitch opportunities to take on mortgages at highly reduced rates. These predatory tactics persist. Mm-hmm. They persist in all markets. And so while there is a great potential and opportunity in cryptocurrency and crypto investing, there are also perils. Let me just give one more positive example, if I might, because this one I think really touches home. It might be a good bridge for our later conversation about funding Black founders. I'm thoughtful about a young Black man who will be the first to introduce an exchange for non-fungible tokens. This is one form among the many forms of cryptocurrencies that would enable the folks who've invested to control the rights to art and music. In our community, when we think about the history of intergenerational wealth lost because we did not have actual ownership rights of music that became internationally renowned, that became recognized by people and cultures who speak languages, many languages all over the world. We lost in many instances, the opportunity to capture that wealth, that intergenerational wealth in our neighborhoods and our communities. One mechanism that may provide a path for that is these non-fungible tokens, enabling artists to capture the total value of the contributions that they make. So there are a number of pathways for this technology to be useful, but there are equally important concerns.
Right. So now, as I understand it, Black folks can buy, stocks and mutual funds on their phone now, right? Just like they can purchase crypto. So why are Black folks buying crypto at a higher rate than they are kind of traditional stocks and mutual funds?
Spencer, this is a great question. And it's really reflective of many things, none of which will surprise most of you. One of them is that in the first, and it's also a good bridge to the rest of the discussion, so kudos to you. Well-organized questions. One of the things that won't surprise anyone in this room is that traditional finance has not been always a welcoming friend to folks in our communities. And when we talk about this a little bit later, we can talk about the challenges of obtaining small business loans, the difficulties of facing down discrimination in the mortgage lending market, and today, news reports establishing, in the context of appraisals for homes even, some challenges regarding discrimination. But before we reach sort of those pieces that we can come to, for the conventional stock market, for the conventional investment opportunity market, we really have been, as a community, I think in many ways, not directly included, but also undereducated about how to access those opportunities and maximize them for ourselves. When I talk to friends about where are they in their 401k, many look at me askew. And partially because we are still, as a community, coming to a place where that is part of our dinner table conversation. We certainly in this room might have many who are better versed than I. You are studying equity research carefully. You have balanced and rebalanced your portfolio and your 401k. But all too often in my family, in our household, within our family circle, I am still struggling to get folks to appreciate that those pre-tax dollar donations can add up very differently over decades than all of the other choices we might make. It's also a challenge when we think about conventional stock markets to really believe, and I think many disbelieve, that that would be a path to intergenerational wealth. So certainly buying one share of AT&T stock in 1950 and holding on to it until 2022 might be really valuable. Might be, I don't know, and please don't quote me, I have no idea. I want to disclaim, I have no idea what one share of AT&T stock is, and more importantly, you would have to time travel because I suggested to you would have bought it in 1950. So no one run out and buy it, this is not investment advice. My real point is long-term investing in blue chip stocks could absolutely be a path for many families to generate intergenerational wealth. But in reality, first, it requires having the income for those investments. But I'm going to go deeper because I spent 12 years teaching federal securities laws. And what I'm going to tell you is the following. The biggest opportunity to capture gain with respect to most securities happens ahead of the public offering. And this is where we're headed. It happens in the investment opportunity space that occurs when the company is private and in that runway, in that run-up to an initial public offering. On the day of the IPO, there is a consortium of banks and investors who have agreed to purchase, even on that day, the day before the IPO, shares of the company stock that is going public at a discount. They know that the very next day, when that company is selling registered shares in a public offering, there will be a jolt in the value of that stock price. Even if they just hold, well, they wouldn't be able to hold and sell right away. I can tell you more about that later. But even if they just had the stock for the purpose of this single purchase, they've captured in one instant such a significant amount of wealth. And this is really the takeaway, that those who invest the day after and for many months to come may never capture that same kind of value, and certainly not in such a short window of time. So there are special investment opportunities that just have not necessarily been immediately available to our community. And where they are, this takes me back to the first point, it's pension funds and other institutional investors who are able to join those consortiums ahead of the initial public offering and gain access to that wealth. So the indirect and direct pathways have been challenging for our community. So it's not that people aren't aware, it's not that people aren't familiar. There are structural hurdles, I would suggest, that really pose a challenge. The other piece is, I've heard all too often from young Black folks, basically, that attempting to get an investment advisor, if what you have is $1,000 or $500 or even $10,000, trying to find an investment advisor that's focused on growing the portfolio that you want to build is complicated. And so when one shows up with $1 billion, you got people knocking your door down, trying to help you figure out how to grow that $1 billion. But when you're working through overcoming student debt, when you're working through navigating mortgages, when you're working through public service opportunities that might change your income structure, when you're working through taking on graduate studies and the cost of graduate school, all of these kinds of things can make for decades of delay in starting to develop a genuine savings portfolio that would get you to the place that an investment advisor would be really interested. And then there's just discrimination. To be blatant and fair and honest, finding an investment advisor who is interested in and believes in you as an individual client can be complicated. Not impossible. I have very good friends who are Black investment advisors who are deeply invested in our community and ensuring that we grow the wealth that we have attained. But on scale and historically, that has not always been the case.
So now, this wealth issue, right? And we all know this, that Black families have about 1/10 the wealth of white families. I think Derek Hamilton did a study where he found that households that were Black that were headed by college graduates had less wealth than households headed by white folks without a high school diploma here, right? And so this wealth disparity is a significant one here. So you kind of alluded, but let's go a little deeper in terms of, is cryptocurrency, is this the great opportunity here to be kind of the great equalizer? Or is it just an area that makes us more vulnerable, the pyramid scheme that, what was his name, Walter? Was it Walter Lee? Yeah, exactly, who had his dream and ready to go here, and then, his money disappears here, right?
So there is wealth disappearing in this space. So, and that's a really critical factor to take into consideration. We will be looking back before we have a certainty about exactly what has transpired in the space, but there are some look backs that won't take 20 years for us to get to. Let me begin with one fact. In 2021, November of 2021, the valuation for cryptocurrency assets globally was something like $3 trillion. Today, it's less than $1 trillion. Anybody who can do basic math sees that as we're reduced to 1/3 of what we thought the value was this time last year. For families in fragile financial circumstances who have placed money into cryptocurrency investments and experienced that decline in value, that can be a fairly significant turn. And so here I want to emphasize there are a variety of classes of investors in the Black community. And please don't mistake my description for my concerns as a set of concerns that applies equally across the diversity of investors participating in this market. So there are certainly investors who can take that hit and keep on going. But I will share that Jamie Dimon said yesterday on a panel at IIF, I'm not going to buy that, but you could. I thought Jamie's comment was interesting for two reasons. One, I'm not persuaded Jamie has to buy cryptocurrency. I think he's got that intergenerational wealth thing sorted, right? So Jamie Dimon, as CEO of JP Morgan, I'm feeling based on the public reports regarding salary and access to other benefits, I think he's solid. This may not be something he has to explore. But for others, I do think that we've seen great reports. Where are they now might be really the questions to ask, but great reports of young Black investors who decided to take a chance in the cryptocurrency market and who gained significant wealth. The real question about all markets is often one of timing. Did those investors remain in the market and have they navigated this period of loss without challenge? And all too often the story of Black investors in traditional or any alternative markets comes so much later. It's almost like a historic look back. We're deeply focused on Black Wall Street 100 years later. The reality is there have been so many intervening moments in time and investment forays that we should equally be exploring almost in real time. So I would love if someone would take on the research project of exploring how Black investors have fared in crypto markets. It would be fantastic to see if they've experienced tremendous returns or significant losses. What we know right now is that it's more than possible for a person to choose to enter into a leveraged transaction. That means you only put down $1, but you essentially place or take a position in the market for $5 or $10, which means you could not only lose the $1 you put down, but you may have had to post collateral for the rest of that. You lose all of that investment. And so as we are trying to help investors navigate the nuances of this market, just on the technology side, right? There are sophisticated and complicated structural investment opportunities arising that leave us deeply concerned that navigating both of those planes at once might be very hard for the average investor.
Mm-hmm. So let's just talk, kind of a final crypto question before we talk a little bit about Black founders. It would be, what's the role of law here in this space? In other words, right now, is cryptocurrency regulated on the federal level, the state level? What's the role of the CFTC in terms of regulation? And then just generally, what should be the role of law in protecting consumers, particularly historically kind of marginalized consumers in the area of cryptocurrency?
This is a great question. So I'll start with where we are in the immediate moment. Our remit enables us to enforce against fraud and market manipulation in the spot market for all commodities. So understanding some cryptocurrencies to be commodities, which federal courts have agreed, and there is proposed legislation I'll come to in a second that outlines a suggested definition for digital commodities. We are immediately at the CFTC rigorously enforcing against fraud and market manipulation or abuse in cryptocurrency markets. To be quite honest, at the federal level, we're often limited. We do have partnerships launched, and for enforcement actions are walking hand in hand with the Securities Exchange Commission and DOJ. But often it's for the smaller investors, it's state enforcers or state enforcement authorities who are also equally critical in identifying scenarios where communities are being targeted, specific communities are being targeted, and actors are engaged in some of that predatory behavior that I described earlier. So we are only beginning to see, as we would see in any market, we're beginning to see the breadth and scope of activities undertaken that are just essentially designed to defraud. And so we are marching that path, but we have a long way to go. And we are engaged as much as we can be. But what I would suggest, and this is the critical piece for understanding why there's regulation pending and why we as a community might need to be exceptionally mobilized in participating in the next steps in the conversation. So there's a gap in the remit of the CFTC and the SEC. So the SEC's authorization to exercise its authority grows out of the definition of a security.
And this SEC being the Securities and Exchange
Thank you so much,
Commission,
Spencer. The SEC is the Securities Exchange Commission, and in fact, that's like a perfect segue. The definition I was headed to is the definition of a security. It's broadly cast. Courts have described it as far-reaching, and that is appropriate because it's designed to protect all consumers, all investors in markets. And so we walk in parallel with the SEC, overseeing any instruments that might be described as commodities. Well, as you can imagine, in 1933, when Congress wrote the Securities Act of 1933, the word cryptocurrency, distributed digital ledger, and blockchain did not appear anywhere in that definition. So at this point in time, Congress is faced with the challenge of sorting out how to best direct authority to oversee this new asset class and close what is a gap in terms of novel and emerging innovation and technologies and our traditional financial market structure. What we know is it's critical to bring, if this asset class should exist, it's critical to bring it under the umbrella of regulation, because under the umbrella of regulation, we can require folks to register. If you are going to sell these assets to investors as a broker-dealer, register. So if you're going to facilitate trading of these assets, you're subject as an exchange to ensuring that you comply with the laws that apply across the board to all financial market participants. So no anti-money laundering. You've got to ask people who they are, where they got their money from. That's a critical piece to the puzzle to protecting the integrity of the entirety of our financial system. But more specifically, just really quickly, in one of the proposed bills, there are two bipartisan proposed bills in the Senate. There are also proposed bills in the House. But one of the bipartisan proposed bills in the Senate that I want to highlight includes a provision, I believe it's Section 8, that was encouraged in terms of its incorporation by Senator Cory Booker. Mm-hmm. And this section explicitly solicits a study regarding the impact of permitting investing in cryptocurrencies in marginalized and underserved communities. I am so tremendously proud of Senator Booker for his advocacy of this study. And I think it's important in general that we find our ways into conversations regarding exactly how this bill will be structured to ensure that, to the extent investors who are part of our community are allowed to invest, they have all the necessary and appropriate protections for investing their money in this space as they would have in any other space.
Okay. And so just a final question before we break here as we wrap this up. At the Joint Center, we're moving into small business. We're looking for a director of small businesses. What do we need to know about funding Black founders?
Yeah, so this is a fantastic conversation because I think as of the summer of 2020, an explosive interest in thinking about economically supporting Black communities and closing that gap that you described earlier, this disparity that we can't fully express, how economists can't explain how this phenomenon continues to emerge and reverberate across our economy. So you described, Spencer, the notion that someone could have gone to college and potentially graduate school, and at the end of that tremendous journey, find themselves in an economically disadvantageous position. And so one of the things I just want to stress, underscore, and emphasize is that we have always had a tremendous entrepreneurship spirit in our community. The challenge has often been matching that with opportunities for funding. All too often, credit, which I would describe as an unrefined, blunt, limited purpose instrument, has been the point of entry for people to access capital. Increasingly, my hope, and I was working with Gina Gale Fletcher last year and hope to continue working with her on an academic paper that expressly looks at this question of how to get access to that earlier stage capital funding that I described. That's that angel investor stage, venture capital stage investing for Black founders. We have to find a way to create a bridge to access to capital, not just credit, because in fact, the reality is it's those capital investments. When we think about the unicorns, the startups that are valued at over $1 billion, they largely have grown out of this consortium of funding that has come from venture capital firms. I'd also suggest the road to an IPO that we were describing earlier is often paved as a result of having made these connections and developed these funding sources and relationships. It's also a challenge. So pattern matching is a phenomenon that social scientists describe as the likelihood that if you worked at, and here I will name a few firms, Apple, Google, some other technology firm where founders, upon reaching the IPO stage, became billionaires, and many, many, many employees are very well off after the public offering, launching additional businesses and continuing to fund. But they're funding one another. They're funding alumni of the same businesses that they were at. They're funding friends that are part of the circle that they are part of. And one of the dilemmas that can arise for Black founders, especially in the tech space, is that those relationships are not natural, organic, or already available to them, which can make it very difficult when they head into a pitch to persuade a venture capital firm to fund their business. They're speaking to an audience cold. It's not someone they went to necessarily high school or college or graduate school with, or whose kids go to the same elite private school that their kids go to. And as a result of this sort of relational challenge, right, it can be very difficult for Black founders with exceptional ideas to ultimately land on sources of capital that would give them the platform to develop and launch the projects that they're creating. So I'm really hopeful that as part of our partnership going forward and my support of the Joint Center, if Gina Gale and I can get our act together, find some few minutes somewhere, I don't know, to produce this paper, we can also be part of a conversation that you all are having here that really needs to be had. I think the phrase in the summer of 2020 after George Floyd was killed was, make the hire, send the wire. In other words, don't talk about it, be about it, I think is what we would have said back in my day. So yeah.
Commissioner Johnson, thank you so much for your insights, for your service,
Thank
for
you.
continued support and relationship with the Joint Center.
Thank you so much, Spencer.